coming to you live from the Nasdaq, the Nasdaq's global headquarters in Lower Manhattan. This is Advisory Live, brought to you by Nasdaq Corporate Solutions. Woo! And I'm your host, Will Briganti, and joining me today is Masood Ghoussi. Masood, great to have you back.
How's it going, Will?
I'm clearly I need a script. It's going well though. Let's get started. We're going to talk about a couple topics: the VIX, large cap activism, and what's driving the markets these days. So let's start with the volatility index. The CBOE's volatility index is at a 24-year low. Are markets too complacent at the moment?
Yeah, so the VIX, also known as the volatility index or the fear index, essentially measures downside dispersion. In layman terms, that means when the markets go down, VIX goes up and vice versa. The last time we saw the VIX at these levels were as you mentioned, over 20 years ago. Yeah. It did flirt in and around the 10 level right before the financial crisis, and currently we saw VIX break $10. The reason behind this is because of the unprecedented and global concerted effort by central banks in order to keep monetary policy extremely loose. As you may know, inflation is always a monetary phenomenon. So over the last 9 years, with such low interest rates and central banks buying up assets, it has essentially created some form of a inflationary pressure in the financial markets. As such, we're seeing markets reach new highs globally, and treasury yields globally collapse.
Right. And obviously for all of our viewers, the CBOE volatility index is a measure of options bets for the future month against the S&P 500. So let's actually switch gears a little bit and talk about activism. Nelson Peltz and Tryon are campaigning for a board seat for Mr. Peltz at Procter & Gamble. What does the rise of large cap activism signal for the market? I mean, this is a pretty unprecedented move. This is the largest company to ever face an activist campaign.
Oh yeah, absolutely. I mean, I guess the short answer to your question is no one's safe, right. Especially with AUM, activist AUM experiencing an explosive growth. To put things into perspective, from a number standpoint, back in 2009, AUM for the activist space was in and around 35 billion. Now, in 2015, actually, it was around 140 billion. So, and probably rising even further. Part of that is driven by market returns as the market have gone up, and part of that is a lot of fresh capital moving in the space. And some people are calling activism as an asset class on its own. So we saw a fourfold increase. In terms of recent deals, to your point, we did see, try and move into Procter & Gamble. We also saw Dan Loeb's Third Point move into Nestle, the world's largest food company, and we also saw Elliott in BHP. In terms of data, if we look at the Activist Insight database, some 1/3 of U.S. companies that have been subjected to activism in the first half of 2017 have been greater than $10 billion. Essentially, anything above $10 billion is a large cap company. The historical trend for that is 27%. So again, the trends are showing that more activists are focusing on larger companies.
Okay. And we'll give a shout out to our buddy Josh Black over at Activist Insight for that data. Thank you so much, Masood. And going into the sort of final bit here, we're obviously at the start of the earnings cycle for the second quarter. Companies are already starting to report their earnings for Q2. What's your outlook for the rest of the season?
To your point, we're entering the thick of earnings. Thomson Reuters and FactSet data show that Q2 year-on-year EPS growth, EPS being earnings per share, is approximately over 8.2%. If we exclude the energy sector, which is operating from a low base due to the collapse in oil prices, that number falls to about 5.2%. And in terms of the market PE being price over earnings per share, the most basic valuation measure, it's trading at around 17.6 times.
Okay. Masood, my final question for you is what's driving the overall market and some of this activity that you're seeing with central banks?
So last night we saw the healthcare bill collapse in the Senate. Now they're going for full repeal. Doubt that will happen. What has investors worried with that is, well, can the GOP govern? if they can't pass the healthcare bill, which they have been talking about for over 7-8 years since day one when the Obamacare got passed, if they can't pass that, can they pass tax cuts? Can they pass their pro-growth agenda, especially with so much power in both the Senate, House, and White House being controlled by a Republican? So that's one thing what investors are looking at. Second thing is the ECB. They are in a leadership position with respect to monetary policy. Any signal that Draghi sends, it essentially moves markets. About a week or two ago, Draghi was talking about how inflation is picking up in Europe. That sent markets down. Treasury yields and European government yields ticked up. However, we saw hard data come last week, retail sales and also CPI figures, which called into weak CPI figures, which called into question the Fed narrative as to is inflation really picking up, after which Treasury yields essentially came back down. And finally, again, earnings is also driving markets the last few days, and will continue to over the next week or two.
All right, well, we'll certainly keep an eye on all that activity. Masood, we really appreciate your insight today. Thanks so much for joining us as our guest. All right, so for all of our viewers out there coming to you live on Twitter, this is Tuesday's edition of Nasdaq Advisory Live, brought to you by Nasdaq Corporate Solutions. For further information on all of the investor relations insight that Masood and the rest of the advisory services team can provide at Nasdaq, be sure to follow us on Twitter. That's at MyCorpSolutions. And you can always check our corporate blog that's located at business.nasdaq.com. Thank you so much for joining us. And we look forward to seeing you on Thursday back at 10:30. Have a great day.